Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is October 30 and we're starting from the majors EURUSD and GBPUSD. Evangelos Paulakis presents. Last week's downward movement on EURUSD became indistinct due to the uncertainty surrounding the last couple of days. And as a result, this sentiment represented by a long lower shadow of the weekly candle. The pair can leave the corrective area once it breaches the support level at 1.0500, the daily target, and 1.0447, the final level of the monthly Ichimoku cross. As for the bulls, they need to break through the weekly resistance at 1.0628 and 1.0653 and update the previous high of 1.0695. Afterward, they can focus on the area between 1.0722 and 1.0766, which combines levels from all their higher timeframes, including daily, weekly, and monthly. On lower timeframes, the recent corrective move has already tested the strength of the long-term weekly trend, 1.0589. But the bulls didn't have enough strength, and so they had to retreat. The key level at 1.0589, the long-term weekly trend continues to be the most important resistance level, and is now the closest mark on the price chart. Further intraday resistance levels are at 1.0596, 1.0628, and 1.0658, classic pivot levels. As for the bears, the main goal is to leave the corrective area of 1.0566. Followed by overcoming the support levels of classic pivot points 1.0534, 1.0504, and 1.0472. Last week, the bears of GBPUSD failed to update the low of 1.2036, which has set in early October, so they kept working within the corrective area. Overcoming the monthly medium-term trend, 1.2135, entering the weekly cloud, 1.2097, and updating the low of 1.2036, are still the main goals in order to gain the upper hand on the higher timeframes. As for the bulls, in order to gain new prospects and opportunities, they need to eliminate the daily Ichimoku cross, 1.2151, 1.2178, 2186, and 1.2221. And take control of the weekly short-term trend, 1.2339. To shift the current balance of power on lower timeframes in favor of the bullish buyers, buyers need to overcome key resistance levels at 1.2127, the central pivot level of the day, and 1.2152, the weekly long-term trend, and reverse the moving average. Failure to do so will contribute to uncertainty. Other potential reference points for intraday movement are the classic pivot levels, which are currently located at 1.2187 and 1.2207. It's a resistant pivot levels. And also 1.2093, 1.2070 and 1.2036 supports. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Ikimovic. Gold has been trading downside this morning, and we found that market is retesting previous resistance level at 1993. If market can reject of the previous swing highs, it's the sign for the further weakness. In case of the rejection of the area at 1993, there's the chance for the retest of the swing high at 2007 USD. In case of the downside breakout of 1979 and hold below, there's the chance for the further drop towards the 1959 and 1953. RSI oscillator is showing neutral reading around 50 market, which is sign of the indecision. And it's Petar Ikimovic again. It's time for USDJPY currency pair. Let's have a look. USDJPY has been trading downside in the background. And Petar found rejection of the support and bullish divergence in momentum, which is good sign for further rally. Due to the bullish divergence in momentum, and rejection of support at 149.35, Petar sees potential for the further growth towards upside references. Upside objective are set at 149.82 and 150.05. RSI oscillator is showing bullish divergence and potential for the further rally. Key support is set at the price of 149.35. What about cross-currency pairs? It's time for EURJPY, Arif Makmur describes. On the daily chart of EURCHF cross-currency pairs is currently moving weekend, where this thing seems from its price movement under WMA30. So that in a few days ahead, as long as there is no upward correction which is exceed the level of 0.9613, EURCHF has the potential to go down up to the level of 0.9416. And finally, here's Laurie Bailey with AUDUSD pair forecast. Let's have a look. The Australian dollar seems confident compared to other commodity-related currencies in its battle against the US dollar, as it continues to rise for the third day. On the daily chart, the signal line of the Marlin oscillator is starting to move into the positive territory to provide better support for the price in overcoming the resistance level at 0.6388 and 0.6412, the MACD line, its blue line on graphic. Breaking the latter level opens up the target of 0.6514 and the prospect of medium-term growth above 0.6897. If the price consolidates below 0.6295, it would allow the price to aim for 0.6171, but this in an alternative scenario. On the 4-hour chart, the price has settled above both indicator lines, where it rebounded from the MACD line. At the same time, the signal line of the Marlin oscillator ascended from the zero line. We are monitoring the pair's potential to rise to 0.6388 and 0.6412 as the first target. That's all for today. See you online soon and good luck.